Let's get some insight now on what's driving this. We've got David Carbon. He's head of economic and currency research at DBS Bank. He joins us now from Singapore. So we saw the yen surge to near a post-war high, and then over the course of a couple of minutes, it pulled back and weakened. What's happening this morning in the currency markets?
I think the weakness there generally is people are starting to anticipate Japanese response to any possible quantitative easing from the Fed. I think basically our view is, and I think increasingly markets' view is, that Japan, is going to sort of draw a line in the sand here at about 80, and if we get more injections from the Fed, which would be pushing the yen stronger, pushing the dollar weaker, that rather than intervene directly in currency markets, which of course is a no-no, that increasingly central banks around the world will be forced to fight back with easier monetary policy of their own. And I think that's kind of what markets are looking at now. If the Fed comes in with more QE, it's much more likely that Japan and England and even possibly down the road the ECB could come in with some sort of counter program.
Okay, so let's just stick with Japan. I'm going to ask you about the ECB in a second, but we've got the Japanese central bank meeting this week. They actually moved that meeting forward so that they could be getting together just after the Fed. Are we expecting action this week?
Well, it's possible. I mean, clearly Japan does not want to see a yen stronger than 80. I mean, Japan, and with no sense or logic to it at all, has seen most of the currency appreciation against the dollar over the last 2 months, 6 months, 9 months, whatever time frame you want to put it here. And, in that context, they've taken about all they really ought to be taking here. Japan economy is not in great shape, and for the yen to be as strong as it is makes no fundamental sense whatsoever. So Japan really wants to sort of draw the line in the sand here, as I say. We had direct currency intervention a couple weeks back, and of course that in the G20 language today is not kosher, but monetary policy easing of one stripe or another is the way the big central banks, the G3 central banks, will fight back. We will get, and we continue to have, a lot of direct currency intervention from the Asian economies, the Asian central banks, North Asia, China, Southeast Asia, ASEAN, India, and so on. A lot of intervention there. Yes?
Where's all this going? I mean, you just mentioned the ECB possibly printing money. We've got inflation starting to move higher in certain parts of the world. You had investors in the Treasury market perhaps starting to get a bit concerned about inflation. How worried should we be here?
I don't think we should be worried about inflation in the U.S. and not in Japan either, probably not in Europe either. But if you look at Asia, Asia is where all the inflows are really headed from the easing from the U.S. and from the easing from the Eurozone and from the injections from the BOJ as well. A lot of this money is coming to the Asian markets, right? Over the last year or 5 quarters, say, we've been getting the increase in foreign reserves in Asia has been running at over $2 billion a day. So it's a lot of money coming into Asia. Some of this is from the Asian trade surpluses and so on, but most of it is not. Most of it is just straight inflows coming out of the U.S., coming out of the Eurozone, and coming into Japan.
David
and if you
Carbon,
ask about inflation, yes.
We got to leave it there. I'm so sorry. Join us again on the program.